Good afternoon. Welcome to the Phil's Gang video, YouTube video rather. Okay, I'm going to explain to you why the stock market is not as good as it looks, and it's setting itself up for a 20% or more correction. It could happen any day. And I'm going to explain why through what we call an assemblage of information. So let's do it. Okay, first of all, what we know with the market is when you have this tight grouping like this right here, when you have a tight grouping, that means there's a consensus. That means that everybody's happy, everybody really feels confident in which way the market's going and the earnings and so forth. We can see that back here too, okay? We can see that back here. Now, but there's a problem with this rally compared to this rally back here. The difference is that 25%, okay, of this rally is Apple. Apple, okay? Now, there's a problem with that. That's like, let me put it in perspective. So you got 25% of this rally Apple. That's like owning a restaurant. You're all happy at night. You look at your sales, and then you discover that one customer ate 25% of the food, 25% of the booze, which means if he gets a chicken bone caught in his throat, he's your best customer. The business, you go out of business if he keels over and dies. Not that they sue you, theirs. It's just that you cannot survive a discount of 25%, nor can a stock market rally, okay? So, example, if just one little bad thing happened to Apple, could be anything, but I'm just saying even Apple, okay, this could collapse. Now, could that do it on itself? Oh, not really. I mean, it can, of course it can, okay? But let's look at assemblage of information. Well, there's another problem that's going on, okay, when I look at this rally that makes me very uncomfortable. If you look at, how many of these stocks are in an uptrend? Of the S&P 500, how many of these stocks, of the 500 stocks, are in an uptrend? Well, there's a little problem. We had 85% of them back in July. Now, we had 85% in July were in an uptrend. Then it dropped to 76%. Okay, then it dropped to 76%. Oh, that's not good. That's in December, and today we're at 72%. So we got a market going up, but we got uptrending stocks going down. Now let's move over here to New York Stock Exchange. The New York Stock Exchange, we've had it hit 4 times in a row, and it's this new high 4 times. 1, 2, 3, 4, and it can't break out. Now why is that? Well, there's a problem over here too. We have 434 stocks are going the wrong way. Okay, so you got net declining stocks on the New York Stock Exchange, 434. You take over here on the breadth on the S&P, you go from stocks that are uptrending, we're 85, drops to 76, drops to 72. So we got stocks, we got our trend of stocks that are in uptrends that are declining, and we got over here, we got declining as well, and it can't break out. There's your problem. Now, let's go get some more information. Let's go take a look at the VIX index. When the VIX is high, that's the fear meter, right? When the VIX is high, we're comfortable, because when the VIX is high, the stock market is low. Okay? Right here. So when the VIX was up here, when the VIX is high up here, let's just do it this way here. You remember it now. When the VIX was up here, okay, the VIX was up here. Okay, when VIX is high, the stock market was down here. Okay, SPY, the stock market was down here. And we bought when it turned green right here. That's where we bought. So VIX high, stock market down here, turn green, we buy. VIX high, we buy. Now today, where is the VIX? Well, when you look at the VIX today, we got a problem. The VIX today, okay, when you look at it, is in the wrong spot. When the VIX is low, wow, so you got the VIX low, and that means the stock market's up here. So let's go back and look. Got everything the opposite going on. So when the VIX was high, the S&P was low. Very good deal. And then when it turned green, as I said, when it turned green, we turned green right here, we bought. Makes sense, doesn't it? Now it's going, and you can see that where we had a crossover, we had a buy signal. Now we got the VIX in the wrong spot. There's no fear. The VIX is down here. It's coming down. The VIX is coming down. So when the VIX is low, you go because the stock market's too high. So just the opposite. VIX high, you buy. VIX low, you go because you got stocks up here. And remember, the problem with this rally, as I just told you, got a declining amount of stocks and uptrends from 85, 76 down to 72% of up. We have less and less stocks that are uptrending over here. We have 434 stocks that are decelerating on this chart right here. So if you put the 434 that is decelerating, going this way, and it can't break out 1, 2, 3, I mean 4 attempts, right? 1, 2, 3, 1, 2, you get it, 3, 4 attempts. And over here, we got the VIX in the wrong spot. When the VIX is high, we buy. Well, the VIX is low, so we're not buying. And the problem with this rally is we have too many stocks that are starting to is missing their uptrends. Okay, when you start out with 85% of your stocks in the uptrend in December, and then you drop to 76% in an uptrend in July, and now we're at 72% in an uptrend, and Apple is 25%. We got a lot of evidence here, okay, between Apple being 25%, okay, of this rally, and then we got the stocks uptrending are decelerating while this is going up. You got the VIX, which is in the wrong place. When the VIX is high, we buy because the stock market's down here. But when the VIX is low, the stock market's too high. And over here, we have 1, 2, 3, 4 times it can't break out. And you have 434 stocks that are decelerating. So you put all that information together, what it's saying to you is you got a stock market that is really trading to where it's perfection. And that means anything could tip it over, and we could get a 20% correction. And that's why I'm maintaining at some point we're going to bring the stock market. It's going to come. The stock market is going to break. Okay, I don't know when, but when it does break, it's going to come. It's going to come down to this point right here. So it's going to come right down here. It'll stop right around here, bounce up, then she'll come break, and then she'll come all the way down to about here, which will give you a higher low. That's what I think is going on in the market. Okay, and that's why it's very important to have charts. And that's why it's very important to come to join my gang so that you just follow me and learn how to read charts. Because, boy, it's all about charting, I can tell you that. That's it. Thank you for listening. See you on the charts.